Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to talk about CAD and give a little bit of an update to a post that we did on TradingView a few days ago last week, suggesting to look to short this market as price came back into a key resistance level. So I just want to break that down a little bit further and look at potential maybe adding trades on this and why we're looking to short this market in the first place. Now, at the time we were looking at this market technically, the market had formed a head and shoulders pattern here back through July, and we broke further lower back into this key supporting point if we look left, where the market rallied from back in January 2019, so the start of the year, and price meandered its way back up to that resistance level, that neckline resistance. So we look to short the market here. Targets back at the previous breakout highs, which is around about that 80.73, which is a good little area of support and resistance, because it was support back in on the 18th of June and resistance on the 13th of August. So a good little area to target on this short move down in here. Really good risk to reward on 3-1. On the 4-hour time frame, the reason we got short in the first place was because of a double top and a RSI, if I can draw it on, and an RSI divergence. So essentially here what's happening is the market is forming higher highs in terms of prices on the wicks, which I've drawn out already, and the price on the RSI is suggesting that we are getting divergence, so the RSI is forming lower highs. So we went short on a bearish candle, put our stops above the highs, looking for the continuation down, expecting that to continue now. There's a nice little hourly setup potentially forming in here. Market's making those lower lows, lower highs nicely, and expect this market to continue moving lower. Now, over the weekend, there was a little bit of news out. I say a little bit of news, some major news out in terms of Saudi Arabia and what's happening with crude oil. Now, what basically happened was there was an airstrike on, or drone strike, I should say, on Saudi Arabia's 2 oil refineries, and essentially what that has done is majorly decreased the supply of Brent crude oil, crude oil in general, and which would obviously boost prices higher. Now, not only that, is the fingers are being pointed at Iran by the US, and even that could extend to some risk off in the markets, and you can see that slightly today. We've got safe havens gaining a little bit with the US dollar, the yen, and the Swiss franc gaining slightly against the other currencies. We've got Brent crude oil jumping over 10% off of this news as well, because of the more demand that it's going to cause for oil. We do have our safe haven commodities moving higher as well, so gold and silver. So if that yen strength is going to continue, then we could expect this market to come and hit those targets down in there. So look for further cycles, look for this market to head back towards that 80.75 previous structure highs through there. This has been John Kibler, head currency analyst at Blueberry Markets. Hope you enjoyed this update. If you do, please leave a like and subscribe to the YouTube channel. We're over 800 subscribers now, which is absolutely amazing. Thank you to all that subscribe to the channel currently. I hope you're enjoying the content, and yeah, thank you for that, and I'll speak to you soon.